So I was going to ask, why do you think Fibonacci works? And also, what about Bollinger Bands? Why do you think they work?
Well, it's a self-fulfilling nature of technical analysis. Bollinger Bands work because they're the most obvious technical analysis tool. I mean, generally I work for 2 standard deviations outside of moving average. Well, most people use a moving average, but it's lagging. So its actual intraday kind of, usefulness is just a reference point. Fibonacci works because it's in nature. It's been around forever. I mean, the one I use is your forearm is the same size as your foot. It's Fibonacci. It's proportions, it's principles. It's not Dan Brown, some kind of crazy mathematical secret thing. It's there to see if something's moved over history, a period of time in a certain way, it will retrace in a certain way and expand in a certain way. It's set in stone. I don't know of anything else in trading that gives you that, that kind of consistency. And when something makes a low from a high or high to a low, that doesn't change. And when it changed, you have to change. You change your Fibonacci's, but until that point, then you're still 80% right, in my opinion. And that was it. I mean, that was my kind of light bulb moment, whatever to call it. Once I kind of figured out Fibonacci and proportions and how things move, you can slot everything else into it. It gives you the framework that's essential, because a lot of people go into the markets lost and then just get more lost because there's always a website or a blog or some guy telling you to trade this way, that way. Then the day, once you get a base, you can then move around that base and do your own learning and just improve. Until you get that point, you're really, I think, just treading water and searching for the holy grail of trading, which doesn't exist.
It's my understanding that you're a believer of the Elliot Wave Theory. Could you tell us about that?
No, your research is definitely wrong. I hate the Elliot Wave.
Oh, do you want to tell us why?
I hate the Elliot Wave because it's so down to individual interpretation. An Elliot Wave isn't an Elliot Wave until it's an Elliot Wave. So there's the 5 waves that make it, the 3 correctional phases that make it. So there's lots of ways to make money, but the way an Elliot Wave starts and the way people interpret it doesn't lend itself to the self-fulfilling nature. If everyone in the market's trading Elliot Waves, yeah, I'll jump on board, but they're not. What I like about Fibonacci, it's set. And okay, that's down to interpretation a little bit, but it's much more easy to see a strong directional move or an extended, candle in the markets than it is just to jump on the back of an Elliot Wave. So yeah, not really a fan of the Elliot Wave. And I teach it, I tell people about it. Why wouldn't you? My point is not to tell people what to do, it's to open their eyes to what other people are looking at.